in order to sell to Web 2, on the retail side, I think it's really about simplicity. It's like make the best developer experience you can, make it super simple, make it like throwing data over a wall. For enterprise, the pipeline there looks a lot more like how do you build up the feature set that makes this look comparable to Web 2. You make it really easy for them to just say like, oh yeah, I'm just putting it on this thing and I just happen to see a cheaper cost, but it still ticks all of my enterprise boxes.
All right, everyone. Before we get into the episode today, I want to talk a bit about Access Protocol. They're built on Solana and solving the subscription problem in a crypto-native way. We'll talk more about them later in the show. Before we get moving on today's episode, just a quick disclaimer. The views expressed on this podcast by either myself, my co-host, or any guests are their personal views and do not represent the views of any associated organization. Nothing in the episode should be construed or relied upon as financial, technical, tax, legal, or any other advice. Okay, let's jump into the episode. All right, everyone, welcome back to another episode of Lightspeed. We are joined today by John Victor, the co-founder of Ansa Research, and really excited to have a conversation around mostly about Filecoin today, but also the DePIN space writ large. It's probably this new up-and-coming narrative that most people have probably heard about, kind of get the general direction or idea, but there's a lot of confusion on what DePIN actually is. So we'll make sure to cover both the DePIN sector as a whole and, of course, where Filecoin specifically fits into the broader picture there. But honestly, John, right before we jumped into recording, we were having a really interesting discussion on why DePIN matters. So maybe if that's actually where we'll use as our jumping off point. What is DePIN from a super high level point of view? And then why do you think it's really important that the crypto industry cares about this subsector?
Yeah, and thanks for having me. I guess so there's many different ways that people have described this over the years. I think you can find blog posts even as far as 2016, 2017, different iterations of the DePIN story have come together. But I think my one-liner is how are we building real services that the crypto economy can export outside to the rest of the world? And so whether that's coming in the form of decentralized storage, how do you aggregate hard drives, whether that's coming in the form of bandwidth or Wi-Fi or compute, all of these are just a question of can you use blockchains as a coordinating mechanism to aggregate resources? And then can you resell those resources back into the real world? Now, the reason I think this is super interesting and the reason that this is different from the rest of crypto is it isn't focused internally on our own economy. When we think about DeFi, we're talking about how do we make it more efficient for people to do things like trade asset A for asset B or NFTs? How do we represent something as an NFT and trade it around? What makes DePIN as a sector really fascinating is this is the opportunity for crypto to actually sell real services, which means capital inflows into the crypto economy, which makes everything else that we've built so far an order of magnitude more meaningful. When we talk about onboarding businesses, it isn't just saying hey, we will build it and hopefully they will come. It's a question of can we build the businesses internally in our own economy and then just sell the services, whether you're Web 2 or Web 3 as a business, you still may be a consumer.
Yeah, I guess contrary to popular belief, maybe the meme coins are fun today, but that's probably not the onboarding mechanism for that next wave of capital and even users, right? At the end of the day, we need to build services that either directly or indirectly benefit people's day-to-day lives. And it gets pretty interesting with the DePIN sector. So maybe let's get a quick overview of what, when people say DePIN or decentralized physical infrastructure networks, that's a very big vertical. You have a couple different buckets in there. Maybe if we can just briefly describe what some of those buckets are and kind of the services that they're working to solve.
Yeah, for sure. So, there is a much broader set of things than the things that I spend my time looking at, but to sort of touch on different versions of it. So some might be the hive mappers of the world who are creating sort of these data assets. They're basically creating a network of drivers who are collecting real world data that are then being able to be sold to other folks. You have folks who are working more on the cloud side. So you could look at people, I think in the Masari sort of framing of the world, it's digital physical infrastructure. So things that are actual physical assets, whether that be sensor type data collection. And then you have digital versions of that, which might be the storage, the retrieval, the compute. In my version of this, I actually don't think these are that separate in the world. Really what we're talking about is what are things that require physical infrastructure to be set up? And then how do you build some sort of coordination mechanism across them such that you could resell this service to other people? Once you start touching the real world, everything to some degree involves location to some extent. So when we start thinking about like DePIN networks, I think you start adding in these extra layers of complexity. But that, at least to me, is like sort of the widest range of like sensor data is like on one end, like services in terms of like the cloud is maybe on the other, and you get like sort of a spectrum, a smearing across of like things that fit sort of in each of these different buckets on the way through.
Awesome. And so, you mentioned that there's a very, very broad subset of categories that different protocols and teams are building in. And you obviously focus on just a small subset of that. So maybe talk a bit about your background, what led you to co-founding Ansa Research, and what you guys spend most of your time on.
Yeah, for sure. So I guess rewind. If we work backwards, so I joined the crypto space in the middle of 2019. So I guess like middle of last bear cycle. I joined Protocol Labs, where I've worked on basically all parts of like IPFS and Filecoin. So when I joined, I was a research PM leading Filecoin's proofs through Filecoin's launch. Post that, I did a lot of work on like the product side, building things that use IPFS and Filecoin together. After that, I did a lot on like the collab side, so working with other ecosystems and other teams that were trying to integrate decentralized storage. And then the last thing that I was working on at Protocol Labs was really actually like trying to do some of this like education work around like why DePIN and why decentralized infrastructure, just as like a meta thesis. So Ansa, which is the company that me and my co-founder started, is sort of an evolution of that last phase of work, where I think like if you were to talk to Web2 people who think about decentralized, like the idea of a decentralized cloud, I think you probably get like two types of people. I think you get one type of person who probably assumes like blockchains can't scale in order to support these types of workloads. So like instant dismissal. The other is maybe like people who look at like all the other stuff that's going on in crypto and they don't really understand how these things can be applicable. And so part of what we're trying to do with Ansa is like give the steelman case for like why should blockchain rails be involved at all with the decentralized web? That's like part one. And then part two is like, if you sort of believe that story, like how do we show you the proof points that they're there? So we spend our time doing three broad buckets of things. Part one is we write quite a lot. We cover mostly things that are in the decentralized cloud space, anything that is content addressed writ large. Two, we work a lot with startups, so we help people with their go-to-market. I think decentralized infrastructure is really hard comparatively. There's a lot of additional challenges that you introduce, and so it's really just trying to help teams be successful. And then part three is we work with capital allocators. So it's both inside of Web 2 and Web 3, helping both like evangelize like why we think this is the right bet that people should be making, and then help market make a bet to like connect startups that are doing interesting things with funds that are trying to do investments in the space.
All right, quick break from the episode here to talk to you about Access Protocol, the easiest and best way to stay updated on what's happening in crypto by following your favorite publishers. You can gain access to over 60 publishers, including CoinGecko, CryptoSlate, and a whole list of independent creators. Most importantly, you can also do this without managing a bunch of different subscriptions. We all know how painful that can be. So how it works is you find your favorite publishers, you stake the ACS token, that's the access token, and once you stake, you gain access to all of that creator's content without the hassle of ads or subscriptions that you can't cancel or lose track of how many you have. Access Protocol already has over 225,000 users that are finding new creators, reading content, and even receiving NFTs from their favorite creators. They're soon releasing V2, so check it out, the link in the description to go give the protocol a try. It's an awesome product, it's crypto native, and it's built on Solana. All right, back to the episode. I think that's the perfect jumping off point to understand your background in the subsector which Filecoin falls into, to really jump into having a deep dive discussion on Filecoin itself. So I think you kind of have to start with the storage network side of Filecoin, and maybe if we can just talk about what this decentralized storage means and how it works for Filecoin, right? So how does a user interact with Filecoin in a way to store data in this manner?
Yeah. So you could sort of boil Filecoin down as like having a number of sort of like meta theses about like what matters in building out decentralized infrastructure. I think like to understand Filecoin, it might be easier to start with IPFS, and sort of like if folks are familiar, IPFS stands for the Interplanetary File System. It's like a way of basically storing and retrieving data based on a fingerprint, which we call a content ID or a content hash of the data itself. The big idea with IPFS is that the internet was built incorrectly. The way that the internet has sort of grown up is like a pathing error based on what hardware we had at the time. And so everything was built in this like client server architecture. And so the idea with IPFS is like we should return to our roots and like think of the world as like a peer-to-peer system. if you think of the internet in general, it's like we have all these computers. The internet itself is a grapevine, and if we can rethink how the protocols work, instead of having things be referenced where it's like I must go to a specific location to grab some piece of data that's inside of some computer, if instead I can just say like, hey internet, I'm looking for this specific piece of data, and the internet can serve it back, you can start doing some really interesting optimizations. And if you're looking at the trends of how is data generation going up, what resources are sitting at the edges given the increase in computing and the performance of your external hardware, you can actually start doing some really interesting things that both make the web more secure and more performant. So IPFS, like the big trends that I think the IPFS and the local first community, if people go look that up later, the trends that they're really looking at is like, look, data is going up for good reasons, whether that be because of like AI and we want verifiability, or it be because local first and we want to cache data so that our applications work in offline contexts, or whether it just be because of security and we want to know that the file that we're downloading is not malware. This idea of like content addressing is something that the IPFS and the local first community is betting on. That's like one set of things that like is being like sort of like underwritten. But if you believe that story, and like the trends that they're looking at there is like data generation is going up, hardware at the edges, like your MacBook is more powerful now than it was a decade ago. So like the reasonableness of like building applications in this way is like increasing over time, and the trends are working towards that. Is like sort of the IPFS bet. The bet that Filecoin makes is like, look, if you believe that that's true, then there is this world where like everything is content addressed, which means that we don't have to worry about where data lives. And if that's the case, then you could have servers that are not run by AWS serving you data. Like from the perspective of a content addressed world, you don't care if data came off of my laptop or an Amazon server or something else. You just care that it's like the bytes that match to this fingerprint. So Filecoin as like a larger bet underneath the IPFS bet is just saying like, look, can we build open markets to serve all of these functions of the cloud? Whether that's storage, which is kind of the first service, whether that's compute, that's like reusing the compute hardware that's sitting on Filecoin miners, whether that's building CDNs. Like all of this can sit under this content addressed umbrella, regardless of where applications are like actually running themselves. I'll pause there. I know that tends to be quite technical and like can get in the weeds really quickly, but you let me know where we are on that.
No, that's perfect. Maybe I want to build a little more intuition around the IPFS side of things. And, you mentioned the client server architecture that most of the world runs on today. Like maybe if we could just explain that a bit more about what that means when like, I'm on my computer and I want to like load a web page, call it Amazon. Like, what is that? Like, what is my computer doing in this client server architecture?
Yeah. Okay. So let's imagine like we go to johnsdropbox.com. So like when you type that into your browser, that's going to resolve to some computer, and you're asking your computer to talk to that other computer, and maybe you're going to like file or JPEG one. So you're going into that computer into some file path to find something. You don't know what this thing is, right? Like you're just assuming that like, hey, if I go to this computer correctly, it's going to serve me whatever the JPEG one is supposed to be. And maybe it's a picture of a cat, maybe it's a picture of a dog. You don't really know, but like you're just trusting that that computer is giving you this thing back that you were asking for. And like when you think about it, that's like a supremely like kind of like weird way of doing things, because like that's not how you think about humans as an example, right? Like if you were to say like, hey, who's the person that works at 15 Little West 12th Street, like desk 3? Like you have no idea who that person is. You're just saying like, I'm going to assume that this person is like the one that I'm looking for and is at this specific spot. So this is sort of like how the client server architecture works, where it's like really trust based. You're assuming that this thing is there, but equally it like adds all these other weird things where it's like maybe like the picture that you're looking for, you don't need to get it from that one specific location. Like it could be coming off of my computer. Maybe I have it, or it's like off a different computer that's closer to you. This is where we will ignore the person analogy and maybe use books. Like let's say we were talking about To Kill a Mockingbird. Like it could be in like the local library here in New York. It could also be on your bookshelf. Like you've asked the internet for this piece of content. Like ideally the way the internet should work is it just serves it to you in the closest location. So you don't have to wait like, oh, you have to fly to New York, go grab the book and get it back. Like maybe you could just take it off of your own local shelf if you have it there.
Okay, so that's the way the world works today. And if you look at the Filecoin way, or more so even just the natural way of IPFS working, you mentioned it was more peer-to-peer based. And so how does that how does that change how the computer is thinking about it?
So think of it sort of like layers of an onion. So IPFS is sort of like, okay, cool. Let's invert how we change how computers ask for data. Rather than saying like, I'm going to go to only specific computers to grab specific data, I just ask the internet for data and the internet gives it back. So you've simplified the problem from like one computer's perspective where you're saying like, okay, my computer no longer has to know, or like my application doesn't know specifically where it needs to go. I can just like ask the internet and someone will give me something back. But that leaves a bunch of other problems that someone else has to solve of like, okay, who's making sure that that content is somewhere, right? Like you don't want to just ask for some content and maybe like no one's holding on to it and the data's disappeared. This is where things like Filecoin come in, where like the answer is like, cool, how do I start building some like cryptographic guarantees around like, if I want to have someone on the internet hold on to some piece of data, I know that that's actually happening. Um, Filecoin has done a lot of really cool stuff with like proofs. This gets into some of like the specific bets that Filecoin has made as an ecosystem, but it gives you this ability to say, if I store a piece of data with some number of providers on the network, they are contractually bound through a, like they call them actors on the Filecoin network, but effectively a smart contract. They're contractually bound to prove to the network I think it's every 24 hours, the entire network is checked. But like they're contractually bound to prove to the network that they're holding onto this piece of data by submitting a zero knowledge proof. If they do that, then they are eligible for block rewards. They can like get like additional incentives effectively for like proving to the network they're still holding on to data. If they don't, they get slashed because they have collateral that's like locked up as skin in the game. Um, so the interesting thing that Filecoin has sort of done is it starts adding extra layers of guarantees. So if IPFS changed the question from like, I must go to this one specific location to grab some data, and I must know that like whatever bytes, I have to be able to verify on my own that the bytes that I got back was the thing I'm looking for. IPFS changes that to just say, talk in terms of content hashes, and then you can verify yourself just by like matching like the bytes that come back to the hash to know that those two things are the same, which means you can untether yourself from having to only talk to single computers in order to grab data. You can now talk to any computer to grab data. The thing Filecoin solves for is like, if I want to trust someone else to hold on and provide services, I can move away from saying like, I'm going to hope that X company is in business. I'm going to hope that they aren't modifying this data. Instead, I can just see that there is a proof that these things are actually happening. And like that as a primitive, that may sound like weird and like it may not seem as important why you might want those things, but I can sort of like give the double click into like, cool, we've built this cool primitive. Is it just because it's like a technically interesting thing to do, or is it useful in a specific way? But like the motivation at least is like with Filecoin, we can start adding these extra primitives to the web that we didn't have before, which then unlocks like certain other things, which we can talk about. But just make sure that's clear.
Yeah, absolutely. Because now it's starting to kind of the intuition is forming here, and we can see that with using alongside IPFS, Filecoin gives the ability to have this storage network. And I want to dive into like the why here, right? So from the decentralized versus centralized standpoint is a little bit more tangible for most listeners. I would say like, okay, you can see why a decentralized network may have some properties around consistency and security that I can avoid the becoming issues when you look at a centralized system. But I want to expand on that. Like, what use cases are you seeing to become the most interesting here, and like why we actually need decentralized storage?
Yeah, so let me start it from a different perspective because I think there's like short-term use cases, and then I think the more interesting ones are actually the long-term ones. Because like I actually think the reason that we should care about these primitives is because it makes it possible to do programmability. Like if you think about DeFi, like one of the reasons that you have composability is because everything is sort of operating in the same shared space. And so you get the ability to chain these different protocols together to get basically like more utility, more basically like compounding from the ecosystem as it builds. The thing that makes Filecoin proofs really interesting is because now you've brought in this cryptographic verifiability, you can start doing things like I want to write a smart contract that says perpetually store this piece of data. I want to make sure there's always 5 copies of this data on the network. I want to automatically set a bounty if at any time I'm under 5 copies, such that a new copy is stored. With the ability to get these proofs, you can actually say like how many copies of this piece of data are on the network. It's not like a probabilistic thing where you now have to like give some weird error bound of like, oh, maybe there's 20 copies today, maybe there's like 3 copies tomorrow. You don't have to like just assume some stuff. Like you actually see proofs showing up on the network. What this also means is you can then combine, so you get like that side of like the verifiability, but then it means you can start triggering other actions. So on that renewal piece, you can now write a contract to say, like, if I'm under there, set an incentive to spend X amount to store the next thing. What this means is you can start chaining actions together. So if you want to say, like, I'm going to write a data pipeline. So like, let's say someone is doing decentralized compute. Every time I create a new data set, I automatically want to store the last 5 versions of this thing in order to like have a retention history. Like these are things that now can be written as contracts themselves, which means all of the funding, like all the tools that we built around DeFi, can now apply to like how do I automatically like pay for and like fund and renew and do all of the servicey side things and know that the service is actually being rendered. Not just like, oh, I'm going to spend money one direction. Maybe the service will be rendered. Maybe it won't. I don't know. And so like the thing that gets more powerful is like as we've built up all of these interesting tools about like even building endowments as an example. Let's say I want to build a pension fund for data or something, right? You could take your treasuries, like your on-chain treasuries from BlackRock or whatever, plop them in a smart contract, generate yield, and use that yield to ongoing fund 5 copies of the Internet Archive as an example. And it's not like a question of like, oh, is X, Y, or Z thing there? You actually have like the proofs that are coming in. You don't have to overfund additional copies if you have some level of resiliency. You just have to like fund up until the amount of like, cool, I have enough copies. They're all active and healthy. But if one falls off, I can like automatically trigger a renewal. Does that make sense?
Yes, absolutely. And I think that's super interesting. One thing you mentioned there was kind of the economics, right? So we can create this programmability where effectively users can speak to this contract, and the contract will speak to the actors on the file, or sorry, the storage units. What's the problem? I guess like validators. So maybe that's honestly the best point to start. Is what does the actual infrastructure look like? So obviously, Filecoin's a blockchain. It is run by miners or validators, and they're actually the ones that are tasked with maintaining and storing this data. So what does the blockchain construction look like, and what does the set of providers look like today?
Yeah. So Filecoin itself has basically a bunch of data centers that are a part of the network. So like the way that it was designed was to use commodity hardware. So like these are GPUs, CPUs, hard drives. But like the Filecoin storage providers, when they're running like the base layer of Filecoin protocol, are basically doing 2 tasks in one. So Filecoin's consensus is a hybrid proof of work and proof of stake. The proof of work side is like they're basically doing proofs on top of these hard drives. There's a proof called proof of replication, which is like, how do I know what is written into the data into the hard drive? And then proof of spacetime, how do I know that that still thing is still there? But with the combination of the two, you basically know like what went into a hard drive and that that hard drive hasn't changed over time. Now, that could be storing data, that could just be storing empty zeros. That's like part of like how the proofs work. But like basically like the state of all of the hard drives on the network as these proofs happen over time. So what's interesting is like the hard drive side gives some extra security to the Filecoin network in that like if you wanted to attack the network, it's not just like, oh, they take 30% of the stake and do whatever. Like you also have to acquire physical resources. So like the hard drives add some extra security. But the other side is you can use the L1 incentives to help acquire a bunch of hardware. And so when we talk about like how do you make a network that can compete at scale with AWS, Google, Azure, like Filecoin today is in the exabytes of scale. To give people a sense of what that means, you go gigabytes, terabytes, petabytes, exabytes. Like today, Filecoin's at the exabyte scale. Like the target, I think that a lot of people hope for the network is that like at its long tail, we'll go from like exabyte, zettabyte to yottabyte. And like this is the sort of thing that like if it is possible, this is like how you get orders of magnitude larger than the rest of like the hyperscalers that exist on the web. But like basically the thing that Filecoin is doing is it's combining these two different like use cases in order to say, one, how do we provide extra security for our consensus? Not every use case needs that, but like it is helpful for some of the things that we're trying to build. But two, how do you allow like sort of like the tokenomics to help incentivize the acquisition of hardware, which can then be used to resell to other people through basically like the storage service. And then over time, when you can repurpose your GPUs and CPUs, like compute services, et cetera.
What does the current service provider? So you mentioned exabytes, but like in terms of like numbers of actors, like what does that look like for service provider or the storage providers today? And then in addition to that, what does the usage look like on a percentage basis? Like, are you at low capacity, high capacity? Do you need to scale quicker and faster, or is it more about solving for the demand side today?
Yeah, so I think there's about 3,000 storage providers, so like 3,000 different entities that are providing services on the network. I think utilization is somewhere on like the 20% end. That's dramatically up for what it's worth. So like it used to be like way skewed towards just like add as much capacity during the bear market. It skewed back towards like shift adding extra hardware to add more data into hardware. I imagine like these things will keep oscillating. That sort of like is tied a little bit to like how are the crypto markets doing overall. But what's interesting is I think there is like a staircasing of this. So like as you see other services come online, the bar to just adding data to the network gets lower and lower. This is maybe very Filecoin specific about like what does it take to actually like make storage deals happen and do it at like quote unquote industrial scale. If you're talking about like doing petabyte scale onboarding, you start having to do things like physically in the real world to like move data around, which yeah, we can talk about as well. But yeah, so like Filecoin itself is basically at like exabyte scale capacity, something around 20 something percent utilization and like on an upward trend. And then there was another part to your question, which I've totally blanked on.
Yeah, just so for now, so at 20%, that shows really the growth over the last year. Honestly, I saw 2023 growth was up about 400%, and the question was really just centered around, what do we do to gain demand side or to get demand side traction? So I'm
Yeah.
curious, kind of like what the Filecoin team is really working on to make it like is it ease of access or what really is it to increase that demand side?
Yeah, so I think there's like three things I would put there. So one is sort of like on the Filecoin proof side. One of the big improvements that happened like over the course of last year is basically this thing called sealing as a service. It basically allows pipelining the process of adding hardware into the network. So you can like and adding data into the network. So you can have someone else run parts of your proofs, and then you can basically do the last mile locally. And so this allows for specialization, which means miners can basically like have more flexibility in how they're doing their onboarding, which like reduces the cost of working with a client and a bunch of other things that just make it cheaper and easier to like work with users. So that's thing number one. Thing number two is basically like more and more services that are basically filling in different parts of the gaps of the Filecoin ecosystem. So like Filecoin, the core storage layer is more like cold storage, but you have an increasing number of people that are building like hot layer offerings on top. So teams like Banyan, teams like Seal, teams like the Web3 storage folks, these are people who are basically like building different services that can layer on top, but then do reads and writes with the base layer Filecoin storage network to basically say, hey, use a storage provider. You don't have to add all of your hard drives to just the cold storage portion. You can also have like an S3 layer that sits on top and like get paid for that, but then roll into the cold storage layer, which is cheaper. And so like it gives more flexibility for the types of servicing, which also means you have more opportunities to sell the Filecoin network in different formats. So it's not just saying like, I'm going to sell only like archival storage to certain types of use cases. You can now start servicing these sort of like hotter use cases that sit on top. The last one, which is definitely the most nascent, but I think is the trend or one of the trends to be looking at for like this year, is just like working closer with compute networks. So especially as there's like a larger demand for different folks who are looking at like, hey, I would like to get as much access to GPUs as possible. One of the things that makes Filecoin kind of unique is although it is a storage network, because it had all of these compute requirements for its proofs, and because of that first thing I mentioned, where you can now outsource your proofs, except for the last mile, to someone else, that means you can repurpose those GPUs to run someone else's compute jobs and then snap that data directly into the Filecoin network. And so this is really interesting. You have teams like Fluence, who I think actually last week had sort of their launch. They're like working with a bunch of Filecoin providers to basically use their GPUs. You have folks like Ionet, who are working with Filecoin storage providers to like include them in their GPU processing. Folks like Akash, Tableland. There's like a number of folks who are basically like, cool, there's all this latent hardware. They're latent hardware that is crypto native that wants to accept these deals. So how do we like maximize basically like the complementariness of these different networks with each other? And I think like that as like an on-ramp makes it much easier where it's like, cool, this is now about how do you solve for a software integration to then have like deal flow that just lands into the Filecoin network.
Yeah, the synergies there seem pretty straightforward with, like, again, the Akashas or the IONets of the world that are trying to solve this compute side of the equation. Is the reason why Filecoin as a network, or more so their service providers, have all this idle compute, just because when you were spinning up the network, there was very high computational cost. And so having these GPU requirements made sense at the time. And now you're kind of just sitting on all this idle capital, which is kind of becoming a gold mine in terms of compute.
Well, so I think if you go find even like the earliest talks that Juan has had about like Filecoin and some of its design, like the long-term goal was always to like basically repurpose the compute at the edges to be able to do more. So you see that in like a number of the design decisions for the protocol itself. So it was like, how do you make it possible to like specialize pipeline and do like things like this? And there's teams, I don't know if you've heard of Bacalhau, like there's different protocols that have been like incubated inside of like the Filecoin ecosystem that people have been working on to sort of like see this trend as it's like been moving. And so I think like it's honestly more just an interesting, convenient time that both things hit kind of at the same moment. So like a lot of the ceiling as a service work, which allows for the outsourcing of proofs, that was started like late 2022 and it was being developed over 2023. And it just so happens that like the big AI boom like really took off in 2023. And I think like a lot of the protocols that are sort of like coming to market now is like 2024. So it's just like an interesting convergence of timing. But I think like the actual like what set the stage for all of this, it was started like way back in like 2019 from like the initial like protocol design.
So if we zoom out a bit, we have this base layer that is run by these service providers that actually create the ability to store all of this data. And that data can then be retrieved and used for various use cases. And you recently just mentioned the retrieval side of things. I think you mentioned it was Banyan or Saturn that you brought up. But I'm just curious, how have you seen those teams and the development of what they're building really change how Filecoin can be used, right? Because now if we have these quick access layers, that just spins up, I would imagine, this new ecosystem of use cases that can actually use Filecoin for. So I'm just curious to get a little more insight and intuition around that.
Yeah, so I mean, like, I would put there's like two big categories. There's sort of like CDN layer things, which is like much faster access, and then more like call it like S3, like hot access buckets. And so I think like honestly, the real punchline is, and I would say separate from like those tiers of like access, there's also just like the wrappers of like how do you make this easy for people to integrate with. And I think like teams like Banyan, I would argue, are like spanning a number of those where it's like I would argue the biggest thing they're doing is like a UX thing of like, how do I package something that makes it easy for people to use? And I think that's like more just about like, how do you have the right types of APIs that people need? So it's less of a specific like, hey, I need to format things in a very Filecoiny way. How do I build something that looks and feels a little bit more like S3, but like behind the scenes, like you can like push everything down to decentralized networks. If you want to like fork and open source your own thing, like you could do that, and the data doesn't like move or anything like that. It's just like, what is the on ramp side? I think in terms of use cases, the things that are really interesting is like the rest of the DePIN world has been growing rapidly over the last year. So you look at teams like Hivemapper, they're generating like petabytes of data a year. Like that is like actually like an interesting crypto native use case where it's like there aren't actually many other networks out there. Honestly, I don't know if there's any other network right now that could do like petabyte scale storage. And so having hot access means that you can actually start picking off more of what they would need in order to be able to like service that network directly. If you're just doing the archival piece, it definitely solves something, but it's like more about like a resiliency story. It's not so much like, hey, I can actually serve my data API off of these things. And I think that's what makes the emergence of these hot access layers much more interesting, where like there's a growing category of teams that are doing like data collection and monetization as a service. And this becomes a much more viable pathway for making Filecoin relevant to those stories. The other I would actually say is like the rise of high performance chains. So like Solana has existed, obviously, but like high performance chains generate quite a lot of data. And so if you want to have more resiliency and like storage around like the access and storing and things like that, Filecoin is like an interesting case study there. But I think actually having the hot access layer means you could build something that isn't just about like, oh, I need to make sure there's X copies alive. You also could say like, I can now make a common standard for how people will build block explorers or like do retrievals off without having to maintain their own archives. So it means that you can do a lot more in terms of like the UX for developers who are doing things with the actual chain data itself. But yeah, that's like a different type of thing that gets unlocked.
The Solana use case example makes a ton of sense to me because I think we're trending in the direction of we need faster blockchains, and even some of the Ethereum and its L2s after EIP 4844 went live. Now they're all realizing that, hey, like, we need to scale execution now. That's like our new problem, and dealing with state growth and things of this nature. And so the Solana deal makes a lot of sense to me, right? They're posting their chain history onto Filecoin, which is a perfect storage solution because right now Solana data has this very interesting reliance on Google Bigtable. Not to say that's a good thing or a bad thing, but more so just an observation where a lot of data sources are all connecting into the same big table, which again is, when you're building this like decentralized network or this decentralized chain, that's kind of antithetical to the ethos of you're creating all of this history. It needs to go somewhere. Preferably that would be on a more of a decentralized platform. And so we see even moving forward and looking out at like the Gen 3 chains, right? The Monads, the Aptos or the Suis, they're all kind of building into this high throughput world as well. And so do you expect that use case of using Filecoin as kind of like this chain history storage center to kind of continue to scale?
Yeah, for sure. I mean, there's already a number of teams that are kind of going after this sort of thing. I think like there's two reasons. So like long term, my hunch is the answer is like you don't use these things because it's like we're decentralized and it's like a philosophical choice. I think the reason that you do it is like, is it cheaper? Is it better for like your own sort of like payment management and things like that? So a good example is like in the Solana case or any of these other high performance chains, like it would be much nicer if you could just stake some SOL and then use like some of the SOL yield to fund the ongoing SOL storage. Like you shouldn't have to be like paying, like someone has to go sell a bunch of SOL at whatever time and is the only one who's like solely funding the like access and storage of whatever. Like ideally that could be like a public goods fund, or like people donate, or like you have protocols that send money in. Like it makes it possible to crowd fund things like that, and you can start using the on-chain infrastructure in the Solana economy to fund the liabilities of the Solana economy. So like that to me is like the much more interesting outcome for this sort of thing, where it's like, how do we build better, use the rails that we've already built to fund other services? And then I think like part of it will hopefully be, especially for public data, like composability becomes much more interesting if you're starting to use these things where it's not like, oh, I only have to work with the Google whatever APIs. Like people should be able to like remix and compose and just like iterate based on the fact that it's like all public and in the open and not on like one team's bill who may not be able to fund it indefinitely. So like to me, like part of the reason that it gets interesting is like, especially for public data sets, it means that more teams can sort of participate. And then, yeah, like cost control and things like that. You don't want to overpay and store like a bajillion copies accidentally. Like maybe you just need up to N in order for it to be secure. And then after that, it's like, cool, we can just make sure we have more money in the future. So, yeah.
Let's talk about the economic side of this. I think we've kind of created a nice picture of how we have this chain secured by service providers that users bring their data to, and then we have this retrieval layer that can, changes up the use cases and the speed of which this data can be accessed and utilized. But the economics are pretty interesting to me. So, how does Filecoin as a network incentivize service providers to participate in this ecosystem? And then on top of that, you just mentioned how it's not enough to just be decentralized. You need to be like a cheaper and better alternative. So what does what does it look like for a user to actually store data on? Like obviously there's a cost to the user, but what does that look like?
Yeah, I mean, so it like Filecoin, all the providers set their own prices, but like roughly, I think you can find storage somewhere on the order of like a couple bucks per tip per month, something like that. I think like the thing that is interesting is like think of Filecoin storage providers as having multiple businesses bundled together. So like consensus, so like securing the Filecoin blockchain. Now that the FEM is there, like securing effectively like the DeFi economy and so on. That's like one service that they're running. Storage is another service which they might get paid for by a client. They might like offer as like a loss leader for other services, things like that. That's what like someone who's paying to use the network, their money would go in that bucket. Compute services, depending on what the miner is doing, they may also be running like sealing on behalf of another miner. So someone may be paying them to run compute services for them. They may be running IONET, so getting paid through that. They may be paid to run someone else's compute, et cetera. And retrieval. So like as people make requests, maybe if you're caching data, you will get paid a little bit extra money on your bandwidth for serving data, et cetera. So like the economics for a Filecoin storage provider it's not as simple as like, oh, Filecoin is the only thing, like the block rewards are the only thing that's paying you. It's honestly a function of like, what are the other services that you're offering? And I think like the correct way to look at this is like, what are the different line items that they may be choosing to charge for? And so like, if you are someone who's doing some of these like large scale scientific data sets, you may actually be willing to price storage maybe even like exactly at your cost or slightly lower if you expect to make it back up on the compute cost that you're going to be charging after. So like if you expect lots of compute jobs to come through because people are trying to filter or process whatever data, you may make that choice, et cetera. So like honestly, like the thing that I think is going to be really interesting for DePIN networks that are designed like Filecoin is like you will probably my expectation is like you get as close to like what is the fiat break even cost because you have all these other additional revenue streams that come from like being tied to an economy. So like for Filecoin storage providers, anything that's happening on the DeFi side is sort of like optional extra revenue as like a result of that. And so there's also an incentive to do things like do the borrow and lends directly from like the blockchain itself, which is what you see with things like glyphs at STFIL, be able to like resell your cash flows, things like that. And so like you basically get a bunch of other optionality there. But from the customer side, like you're sort of like a free rider to some of those use cases where it's like, yes, you are cost sharing on like the proofs, but it's not just like you are the only one paying. The blockchain consensus is also paying for that too, if that makes sense.
Yeah, I love the market approach to the resource pricing. And fundamentally, like resource pricing for blockchains is a bit of a challenge, and DePIN networks kind of get the ability to lean on some of that real world pricing by using or allowing the service providers to create their own market prices and kind of come to that equilibrium. So I definitely agree with your view that over the long term, we probably get towards that fiat break even number. That's an interesting way to look at it. But I want to talk a bit about customer segmentation here. So I think it's about 40% of clients that are using Filecoin today are storing over 100 terabytes of storage, and that's quite large. So I'm curious that like why is there this leaning towards larger clients in terms of data storage, and then how do you think about onboarding like Web 2 users, and what does that look like today? Because the Web 3, like Solana, the Solana example feels very natural, whereas a Web 2 service provider kind of pivoting to use Filecoin. I'm curious to get your take on what that looks like to achieve that.
Yeah, so I mean, I think the reason the terabyte size, like, it makes some more sense if you know like what it looks like to do the onboarding into Filecoin. And so if you're doing these super large deals, and if you are mostly targeting archival, like the types of data that you will be attracting tends to be like the super large stuff. So I think that's maybe a little bit more about like given the tools that people have had historically, and given like what is the lowest hanging fruit, like Filecoin as a base layer by itself probably fits the archival bucket most neatly, which is why you see like a skew towards that. I think this is actually where it gets much more interesting to have some of these storage on ramps. So teams like the Lighthouses of the world, the Web3 storages of the world, even some of the teams that are targeting like decentralized compute, so like Decentrally or like the chain store folks as well. Like the thing that makes it interesting is because they are going to have to like solve for these sort of like intermediary layers, like they will also act as like de facto aggregation services. So you already see it with teams like Web3 storage and NFT storage, where like they're doing behind the scenes a bunch of bundling effectively. So like when Metaplex is like using NFT storage behind the scenes, like Metaplex is taking these NFTs, it's getting bundled together, it's being made available over IPFS stuff, but then it gets batched and stored on Filecoin. But it's batched and stored as like a 32 gigabyte chunk. And so like you can still pull back the individual NFTs, but you're basically like seeing a chunk that's stored on the Filecoin side. Um, and so I think for Web3, basically like what you'll see is more teams that basically fill this gap in order to like make like you won't see it at the Filecoin base layer, you see it at like the higher layers. Um, for Web2 people, I actually think this then is kind of the same story. The thing that matters is really just like what gives the right developer UX, because most Web2 people, and honestly even Web3 people, don't want to have to think about like all of the processing stuff. What you really want is just to say like, there's a thing that looks like an S3 API and it's got some extra features behind it, but like I just throw data into the internet and the internet grabs it and it just does a bunch of stuff. Like I think honestly, this is where it's like, in order to sell to Web 2, and I think like we should put an asterisk behind there because I think there's two types of Web 2 users. There's maybe more on the retail side and more on like the business side. on the retail side, I think it's really about simplicity. It's like make the best developer experience you can, make it super simple, make it like throwing data over a wall. And I think that is the easiest way to like get integrated with people's like personal projects, things like that. I think for enterprise, the pipeline there looks a lot more like how do you build up the feature set that makes this look comparable to Web 2? And what that means is like, how do you build subsets of the network that are SOC 2 compliant so that if you are a Web 2 customer that has like regulatory requirements, you can still store with these providers, but just hit the data centers that have the certifications that you need. The same is true, like if you look at like the movie industry, there's certain certifications they have for like the types of like I think it's like MPAA something, but like there's certain types of like certifications that they need in order to store data on those providers. I think this is where it's like you can still do that in a decentralized context. It just means that you're not filtering to the entire 3,000 storage providers on the network. You just need the primitives to say like I have a verifiable credential that lets me to filter to the 100 something on the network that have whatever thing, and I'm going to like run a bid across those 100 data centers. So like that's honestly just about like, can we build up the primitives for storage providers? Are they getting like the certifications they need? Do you have good tooling so that when like, I don't know, one of these large organizations is looking to store, they aren't trying to learn all the Filecoin stuff. They're able to like put it into something that feels like a data mover. And there's teams in the ecosystem, teams like Steel Dome that do this sort of thing. But like you make it really easy for them to just say like, oh yeah, I'm just putting it on this thing and I just happen to see a cheaper cost, but it still ticks all of my enterprise boxes. But this is where it's like, there's a lot of like in the weeds work that has to happen to like bridge the gap between Web 3 and Web 2, which is, I think, some of the more nuanced discussion.
Okay, so would you say it's fair to say that the basically the go to market is really reliant in many aspects on the teams building on top of Filecoin, and I don't think that's too dissimilar from like even Ethereum, right? Like how do you get people using Ethereum? Well, it's you build useful applications on top of it. They interact with the protocol, and of course the that has like transient effects on the chain itself. Would you say that model is kind of the same for Filecoin, where the teams like Banyan or Saturn are like building products that service the Filecoin ecosystem, but they're like, as you mentioned, directly handholding the client, giving them the services they need. Is that kind of like the right mental model for this?
I think that's right. I mean, like, I think that is, I mean, both over the long term, I think the thing that as more and more teams like spin up their own services, you'll see more flavors of that. But I think that is practically like how many of these things work because it scales much better than like any individual team that might like try to shoulder that burden. I think like over time, the thing that you want is like as like low a bar. So like what you really want is to like have the lowest friction possible where it becomes like a fully protocol native thing of like you just throw X, Y, or Z over a wall. Um, there's certain things that you need if you want to do the full protocol native version of that. But this is where we haven't really talked about like IPC and subnets and things like that. Like that is a whole other vertical that tries to enable like much more protocol native interactions for some of those things. But especially as you like stepping stone your way up, then yeah, like especially for teams that are trying to be like basically like the B2B salespeople of the network, and like build these services that sit on top, it makes sense that it's kind of like both for their business, but also for the Filecoin ecosystem. Like a lot of people want to rally around and support them because like for the storage providers, they don't want to run their own business development arms. Like they would much rather like if they meet people, funnel it to someone like a Banyan or someone who might be able to help do like that sort of like long-term customer management, et cetera.
Very, very interesting. I want to talk about the FVM a bit. We briefly mentioned it earlier, but what was the necessity for building out this programmability layer?
Yeah, so this is a really good question. So, like mental model, the FVM itself is built like a hypervisor. All that means is like it's built so that you could design or deploy many different VMs on top. So, like the first one is the FEVM, but like in theory, you could have like a Moose VM or like the Agoric VM or like a Wasm VM sitting on top. And part of this is because of like one base layer things that we wanted to solve for, but two is sort of like a vision of like as you have IPC and like scalability with subnets, what are the different types of things that you'll want, and how do you simplify across like that experience? So on the former, I think at a base layer, there's a lot of things that you sort of miss if you don't have programmability, which makes it harder. One of the easiest ones to point to is like just building good capital markets for storage providers. So you have all these storage providers, they need to lock up collateral, they need both for like adding capacity and take deals. And like prior to the SEM, that was mostly handled off chain and sort of mitigated through things like multi-sigs. And that sucks for a number of reasons. It means that a storage provider that wants to upgrade their operation, they have to go talk to like other humans to make that happen. If they want to like acquire capital, they have to hope that the lender that they're working with has already sourced enough Filecoin at the moment that they need to borrow. And so you ended up with these like relatively rigid contracts, which required a lot of like manual coordination. Versus fast forward to today, when you have things like Glyphs, STFill, there's like a number of teams that are building these different DeFi protocols. It's just smart contracts. Like, so the storage provider itself is wrapped by a smart contract. The smart contract manages what the miner can borrow, what they have to repay. Everything else is just like liquid staking that you would imagine elsewhere. And so it simplifies that. There is no humans to talk to. It's just like, cool, there's a pool of capital that's there. You can borrow, you can repay on your own time, etc. And so from that side, it just like increases capital efficiency. It means that you can start building other things as well. So if like as more payments move on chain, if a miner wants to resell their cash flows, something like Glyph would be able to do that as like a service where it just says like, cool, the smart contract wraps the miner anyways. So long as the miner is paid at this address, you could do the normal like pipey thing, like the Web2 company pipe of like, cool, there's a steady recurring stream of cash. Maybe you want to sell that to like a maker or someone at a discount. You can like tokenize this and just reroute the payment and use the block rewards as a backstop. So you know that like even if they don't pay, you'll garnish their wages in a different form. So like I think those are the things that are like really exciting, which only become possible if you have programmability as like a core feature of the network. It also makes it possible to build other services that you couldn't really do on the FVM natively. So like Lighthouse is a good team. They're trying to build this like perpetual storage service on Filecoin. Like if you want to be able to say store n number of copies, automatically renew, etc., like you could do that through a bridge. So like let's say they built that on Polygon and they're trying to talk to the Filecoin network. The one downside though is you're adding in this like bridge risk, you're adding extra hops. And maybe that's fine for certain things that are not happening on as frequent a basis. But you're now also saying like I have to pay basically like an extra cost every time I want to view the proofs. And so you're adding just like more complexity on that side. And so it's easier to just even reason about like, cool, let's separate these two functions. The renewal contracts and stuff can just sit on Filecoin. I can manage the capital on whichever side of whichever protocol makes sense. But at least like I have a clear thing on the Filecoin side of like, cool, make sure there's always n number of copies. I get the proofs landing on chain, and then it's easy to have someone just like do the rehydration, etc. Um, so that's like on the first part that I mentioned of like why for the base layer of Filecoin we need these things. The other reason actually to add there is for anchoring subnets. So you have a basic way of doing like with some security guarantees, the like anchoring of an off-chain thing to the Filecoin network so that you can do things like message passing, etc. So that's like why on the base layer. For the SEM on IPC, so to give a primer of IPC, you can sort of think of it as like the scalability solution that's being incubated inside of the Filecoin ecosystem. With IPC, you could deploy things, subnets, as either rollups or side chains. You can sort of configure them how it makes sense for your use case. But because the use cases that Filecoin is targeting are much more on the DePIN side of things, things like Fluence, as an example, they just want to be able to deploy their compute layer. Like the SEM, because it's built as a hypervisor, means that you could have whatever VM you need to run your compute in this little subnet. So you don't have to reason about like different networks or whatever. Like you can make it much simpler for developers who are just trying to like build on Filecoin to say like, cool, the FVM as an environment exists everywhere. You can choose which VM inside of the FVM itself that you want to deploy things to, but you don't have to like worry about like, is this subnet going to have X, Y, or Z, or that subnet going to have ABC? Like they're all sort of starting with the same toolkit to begin with, which makes it easier as you like imagine more and more different parts of the stack being built out to just say like, cool, there's some native things that are just existing everywhere that we can commonly reuse.
Okay, so that's a lot to unpack there. So first off, I want to just get your take on. So it sounds like the programmability here just enables development teams that are building on top of Filecoin to have just a wider toolkit when they're building out their products, and that ultimately would enable better services. Is that really like kind of a fair take?
I think that's right. So I think like one view it. So for the base layer, I would say like that is the way people think about Filecoin. It's like, yeah, just make it easier to do more flexible stuff. So you don't need a network upgrade for every little thing that you want to deploy. Almost in the exact same like mental model of like Ethereum back in the day. It's like you can have a bunch of very bespoke chains. Having some amount of programmability means that you don't have to like get everyone in the network to agree everything out of the box. It's like, cool, if things come up that make sense, people can deploy them, use them, etc. that's sort of like base layer stuff. I think why the FEM is designed the way that it is, it's thinking about like, we know that we want to have different subnets that can have different properties. And so just giving us like one shared framework that we can deploy in all of these different contexts, and then people can customize it in each context as they need to.
Okay, and so when you say separate subnets, then are you referring to like actually separate chains that are within the Filecoin ecosystem?
Yeah. So, I mean, subnets themselves, this is, and I realize we're already at an hour, but like, yeah, to give you the quick version, basically, yeah. So, like, these are chains. They can be long lived or they can be short lived. I guess the way to think about subnets is like, how do I define like different regions of the network that can operate with like slightly different contexts? So I could have I could have a subnet that runs just like a rollup if I wanted to, or I could have a subnet which is like just one computer that has like very weak guarantees, or it could have like a subnet that is like a geographically bounded thing, and it's just like a subset of like nodes on the network. Now, like, why would you want things that operate in each of these different categories? So one might look like I'm building a rollup for all the reasons that people build rollups. It's like scalability, etc. I might have a single computer thing. In the case of like, well, actually, like a good example is like maybe I have an application that isn't super security, like doesn't require that much security. It may be a unidirectional thing of like, I just want to like spend money into some specific subnet in order to like run like a game or something that's like low value. And then the regional subnet may be something in between where it's like, imagine you have a CDN and the CDN itself has like, I don't know, maybe 50 nodes that are operating locally and they're all distributing content. You want to cache some amount of like dollars in there, but it's less secure than like the base layer. And you just want to be able to spend it down. Like the idea of that is honestly optimizing more for performance because like you don't want to get global consensus for a CDN necessarily. If you look at like the time to first bytes for a thing like an Akamai or a Cloudflare, it's usually on the order of like tens of milliseconds. So like lower than what like global consensus will get you. You just want to cache data in a specific region to be able to like spend it. And so like there you may want just to have something that like gives you the ability to like say, okay, these 50 nodes or whatever, cache these videos and then like spend down my bandwidth as people like do it. And then I'm just pulling from a base layer that's more secure in order to like pull like the next $100 to spend for bandwidth consumption or whatever. So like you might have different flavors that look like that. But the way like IPC's like big selling feature is that it's like super customizable. So like you can swap out the consensus mechanism, you could swap out like the security requirements there. You can even have it be like a nested hierarchy of things. So if you want subnets that spawn on top of subnets, you can do that too. So it's honestly just trying to like target like what is the full range of things that we expect people to want to do with hardware, and then like make that possible to do as you tune different types of applications that might sit on top.
Gotcha. Okay, John, we're definitely gonna have you back on for another Filecoin episode round two because I have 100 more questions now. But I do have one more question that's like honestly only it's very deep and adjacent here. But AI does get looped into the deep in conversation quite a bit. It's very GPU hungry. Compute is one of these things that does certainly fit within the deep in sector. I'm curious to get your take on how you think of all of the AI sector as a whole and how that's kind of panned out over the last couple of months, right? ChatGPT is becoming commonplace for anyone who's never heard of anything to do with any of this, and AI agents are feels like we're quite close to something like a ChatGPT having right access over your computer. What do you make of all of the AI sector?
So I'm gonna plug a blog. There's a blog called Wild Bill. I'll send it to you, and maybe you can add it in the show notes or something.
For sure.
I think like AI and crypto, I think you see it every now on Twitter where I think some people get that like it's a convergence of themes, and then other people are like, this is people just like riding the hype wave as maximally as possible. I'm in the convergence of themes bucket where it's like, I think verifiability is such an important primitive that like crypto brings and that AI needs. And also like this idea of like, let's imagine you have an autonomous agent as a thing, right? Like, how is that agent going to run any service if it can't spend its own money? Like, and this is why it's like, so we talked about like why build services that are programmable, and like why do you want to make it possible to spend money down? It's like, I want an AI agent that has its own little bank account on whatever chain. I don't really care, but I need it to be able to like run its own compute to ask questions. Like it needs to be able to invoke a service to say like, cool, go query X, Y, or Z thing. It needs to be able to pull ABC data. And that means it needs to be able to pay for those services, which means we need protocol native Rails to actually run the services and services that will accept them. Um, so like I think there's a lot, and I think we're like relatively early in all of this. But I think like one reason why the crypto DePIN story is really interesting, though I want to caution, I think it's much more nascent than people give it credit for, is like I do think this is the end game of like if you imagine AI agents that are going to go run actual services that are going to be used, like the idea that they will need money is like a crucial part of that. An ability to spend that money on services that will be useful is another part of that. And I think like this is where the convergence story comes in. I think the other half of it is just cost, where it's like one of the big moments for me was like I don't know if you saw the Sora demo and like had the same sort of reaction, but it's like it feels very clear that if you have sort of the democratization of content creation, one of the things that we're going to see is like the YouTube effect, but just for like a higher grade of content. So it's like you're going to imagine like so studios themselves like they may have $1 billion budgets now, but like you will have like the thing that will matter is like art students will want the cheapest like actually honestly it's going to be the cheapest version of compute that makes it possible for them to create like the equivalent, right? Like I don't know if that was a coherent statement to say it again. Like the thing that's going to matter is if the tools for content creation just become widely available, then cost becomes the next barrier. And so if you're saying like, hey, there's 8 billion people that now can create movie studio quality content, like you're going to see a massive influx in demand for compute, for storage, for just generation of assets. And like price sensitivity will matter to a large portion of that population. And so like you're going to see like a huge influx in like the adoption of these services if you can build them correctly at the cheapest price point. And I think the thing that makes crypto interesting is it's like if you've designed these services correctly, it's like how do you union as much hardware as possible, which hopefully means you also are getting like how do I get the cheapest offering possible. This goes back to that point I was making about like the break even is probably just like what is the COP cost for these things. Like this is I think actually how those two trends also intersect, where it's like if crypto actually ends up being like the cheapest way of offering these services, then like as these tools become more and more like open access, you'll just see more people who are flocking to crypto as like the back end for running the processes.
I figured you'd have a fantastic answer to that question. I definitely agree with you on the second point. I got a potential pushback on the first point. So
Oh, hit me, yeah.
I continually say, AI agents will need a wallet, right? They can't walk into your bank and pull out cash and go do something with it. But someone actually hit me with a pretty decent response to that the other day, which was, okay, well, why can't I just give it my credit card information and say, you have $100 spend limit, go buy me this pair of shoes? I'd like to get your take on that.
Yeah, I mean, so I was talking to someone else about this. I think the answer is like, how do you bound constraints, right? Like, yes, you could totally do that. And how do you make sure that your AI agent doesn't get spoofed and like accidentally spend $100 1,000 times? Like, the problem is so much of the web is built around social trust, and like AI agents are notoriously not, and maybe they'll get like super smart, but like what you actually want is like hard bounded constraints to say like, cool, you can do up until this line and no more. And like this is what I will send you in that blog post. But like, there's actually a number of people from the AI side who, one of the reasons I think they're more optimistic about crypto is like they are two opposite sides, right? Like cryptographic verifiability gives you the bounding constraint, which is, I actually think, the important feature here. So it's like, if I want my AI agent to go spend only up until some amount, I need to make sure that they are like someone doesn't prompt engineer them or like prompt inject or do something to like overspend my money. And like that then requires like more and more tooling to be able to say like how, and again, let's use another example here. You spawn an AI agent and that AI agent is going to spawn another AI agent to go like subcontract the task. It's not even now a question of like, oh, I program and say like, I'm going to bound my AI agent to do something because maybe my AI agent is talking to someone else who is a broker that's talking to other AI agents, and I need to scope that AI agent's thing. And so, like, I think the problem ends up becoming like both a permissioning and access thing, but also like a verifiability thing. Um, I don't want to butcher this guy's blog post. It's like a good 8-minute read, but everyone should read it after this.
I will definitely put the link in the show notes there, and I agree. I was talking to I'm trying to get them on the podcast, so I'm making this intentionally vague, but they work in the crypto division of a very large payment processor. And I asked them this question. I was like, why did they can't I just give them my credit card? And they had a very interesting answer that it comes down to instant settlement on blockchains, right? I don't want to end trust because if you're a payment processor and you expand into a new country, you need a lot of infrastructure like banking partners and things of that nature, and you have to trust them to actually do the things that you need them to do. But if you're an AI agent, it's actually the lowest form of trust possible because they're just trying to achieve the thing that they were told to do, and sometimes they even may hallucinate their solution. And so their point was like, we need instant settlement rails that we don't have to trust anything because then it doesn't matter who's on the other end. And like you can imagine a world where you have two AI agents making micropayments to each other, and like why would one of them ever want to trust the other one? And I was like, that blew my mind. And this whole world of AI agents and making payments I'm so intrigued by it.
Yeah, I mean, like, I do think this idea of like the thought exercise for people to have is like, let's imagine it's not even like you talking to your own agent, but like your agent creating its own agent. And like, how would you make that work? And I think a lot of this implies like the way that we've thought about like permissioning, access, payments. Like, again, it's like you sort of squint at the world and you realize it's mostly run on social trust of like some guy has like a database that's supposed to like make sure everything is okay. And in a world where you can't make that assumption, you have to rely back on like cryptography. Whether that means blockchains, like in some contexts, that means blockchains. In other contexts, it just means like we need to start injecting more cryptographic signing in more places. But it's convergence of themes. Like, yeah.
Absolutely. Well, John, we'll be sure to send over that link. We'll put it in the show notes. And to the listener, we'll also include some more information about John and Ansa Research and where to find out more about them. But John, thanks a ton for coming on. This was a fantastic conversation. And we'll be sure to have you back on for a round 2 of this. But cheers. Have a great rest of your day.